I think we have already started to see some reaction. I mean, dollar is strong in December, which is not the usual thing. I mean, the usual seasonal movement in the dollar in December would be for weaker dollar, higher stock market. You know, they call it the Capricorn effect, for example. We are not seeing that. I mean, stock markets are higher, but the dollar is strengthening still. I think that, in my view, the difference lie in the fact that the Fed is tapering, and therefore the dollar is strengthening. We will see more of that effect into 2014. And in my view, I think insofar as dollar Asia is concerned, the big question is whether the tapering comes with very strong growth. Because if there is strong growth, then Asia could benefit from that. As of now, I don't see that. The simple indicators that we are looking at right now is, for example, looking at the PMIs, the ISMs, you know, globally. That strength in PMIs, ISM have not been reflected in stronger Asia exports. So what I'm saying really is that the recovery in the US economy is modest. And as of now, it has not been translated into stronger export demand for Asia output. Unless we see very strong growth out of the US, leading to very strong growth in Asia exports, I would still expect dollar Asia to be higher into 2014. Well, for now, there isn't a significant impact, simply because I think, you know, being able to manage the current seasonal liquidity tightness to keep rates at around about 6%, I think is benign. You know, they have issued some reverse repo, like you mentioned just now, and therefore pump in some liquidity of around about 29 billion on Tuesday. Rates have fallen to around about 5 to 6%. I think that's benign. And for the PBOC, it seems to think that this is really just seasonal tightness in liquidity, really driven by tax repayment and festive season. Now, on the other hand, the PBOC is worried about pumping in too much money in the fear that it could actually lead to, you know, further inflating the housing bubble, for example. I think the property bubble is a bigger concern for the PBOC. So it is trying to manage this current situation and hope that it will pass after the Lunar New Year at the end of Jan, for example. Now, if they can manage to keep rates at around about 5% through to Jan or end of Jan into Feb, then I think that would be a success. I think yields will come off to around about 4% after that, and that would not mean any major impact on the Chinese economy or Asian economy. Now, that is a delicate balance. Failing to manage that liquidity situation and getting yields back up to around about 9% or you know, into double digits, then it may have some impact on the economy. That is not my base case. My base case is still for PBOC to manage this thing nicely, and therefore I'm still you know, quite happy to see where it is right now, and I believe yields will eventually fall.